Hello and welcome to TA for Traders. It's Tuesday the 9th of May. I'm Nigel Croft. In this video we'll be looking at the pound against the US dollar Forex cross, and what we'll see is that the pound has rallied into resistance. It's starting to lose its upside momentum and that further consolidation should be expected. So here we have the daily picture on the pound against the dollar. Each candle represents 1 day's trading, and what you can see is that since the announcement of the snap election we've had a good run in sterling, but we seem to be running out of momentum, and that's been indicated by the RSI, which is starting to roll in a downward trend, and the MACD, which are also rolling over. And what you can see here is that above the 130 level there's all these resistance points that are troubling the market. You can see those more clearly by looking at the weekly. So here each candle represents 1 week, and you can see that we had this period of about 10 weeks trading through last summer, autumn, through July to October, where the market just moved between like 128.90 and 134.250, and just went sideways before we fell off in September, and that is now causing some indigestion on the rally. That's only natural. What you'd expect is for a few weeks trading, if we're going to continue the bull picture, is a few weeks consolidation in this resistance before we then got a push up through it. That would then create a reverse head and shoulder formation, with that being the left shoulder, then the head being all the trades that we had in the interim, and then if we do consolidate, this will be the right shoulder, and then we could get a push up through. If we do get a push up through, it would be positive, because above the resistance level of the 134, there's not a lot of resistance until we get to 138, the bottom of these. Other factors on this market, the downtrend in 50-week moving average, that's creating its own problem, and is the key directional force at the moment. So that needs to turn. We've seen already that the 20-week has turned, so that's good, but we really need, for the medium term picture, we need this 50-week to turn, which will take time. And as I said, we're into resistance, and consolidation should be expected. Looking at the short term, so here each candle represents 4 hours. We've just lost a bit of momentum over the last 2 to 3 days. That's indicated by the RSI, which has gone back below 50, presently 48.1, and again the MACD's rolling down. What we're finding is we're on the support of the 54-hour moving average, which is giving support, which is good. The 24-hour average is still moving up, the yellow line, so that's positive as well. On this short term, if it can hold up and these moving averages keep moving up, then we could get a test of the resistance quite quickly. But my view is that we are going to come back below the 54-hour. And once that occurs, you'll see these moving averages starting to roll over, and really one would expect the 128, this support level here, to be tested. The next couple of days is going to be key for this, but I would expect a breakdown below those moving averages. Looking at the support resistance levels on pound against the US dollar, Well, the resistance 129.90, that's from yesterday, and then 131.21, that was from last year sometime, one of those resistance levels that I talked about previously. On the supports, 128.305, and then we've got the 20-day moving average at 128.09. So that's been TA for traders looking at sterling, which is the Forex cross of the pound versus the US dollar. I hope you found it of interest. If you're not a subscriber to my YouTube channel, please do subscribe. I'm trying to get the subscriber numbers up. If you go on bulletin boards around Forex, please do post this video. Let's get the TA for traders message out there. I'm on YouTube most days with videos not just on Forex but commodities, equity indices and single stocks as well. So it's all very useful information for you. Please remember, these videos are for educational purposes only and are my opinions, and in no way are they meant as an investment recommendation. Please do read the disclaimer. Thank you.